had there at that point. So I was a little bit surprised we saw anybody willing to buy through that phase. And fair enough, it's up to them, innit? If they want to lose their money, they can lose their money, but it certainly wasn't me. As it came down into the bottom edge and you saw that the price started to exhaust into the bottom edges, now you're starting to look at these little voltics that are starting to pivot the price around about the 45 area. And now you're looking into these low edges for that kind of pivot to turn the price round. And you can see it was a good attempt at turning the price round. Came back down into the same price area here. And again, the same type of thing happened into the bottom edge, turned the price round again, and another buy-side reversal from 46s up to the 60s. Came back into the same price area again, and obviously you're looking for that exact same reversal, and this time not quite the reversal that you were hoping for. And you can see that the selling, the buyer, got jammed up here, and all of a sudden that opened the door to this little press to the downside that we've seen there. And that's exactly, it's almost exactly the same as what happened in bonds. That when the buyers came in, we sold to them. When the buyers and equities came in, there was a great sell to back to those guys. And then you start the process all over again on the buy side reversal swings. And that's obviously how it's starting to just play out just now in this this chart. Starting to see some liquidity being added. You can see that there's now liquidity starting to come back into the S&P. Because up to that point, remember, it's always going to be skinny liquidities, and that's what you've got to deal with. You've got to deal with a kind of skinny liquidity environment, which means higher volatility environment. I like the buy side of bonds. We're making some money. I've bought some more bonds there at 27s, 28s, 29s. Did anybody join me on some trade there? 27s, 28s, 29s? You should have, because we just told you about it a few minutes ago before it happened. We said that we were closing out our short positions to get long, and then it retested it. So you should have been able to get a little piece of that action. My Ninja Trader got filled, unfortunately, at 29. So it looks like we might get scratched on that on Ninja Trader, and we might have to come back in again. That wouldn't be a surprise if we have to come back in, because obviously it's just ahead of 2 o'clock. The book hasn't gone bullish, so that's something we've got to remember. The book hasn't gone bullish yet, so I think we might have to just keep working this for about the next half hour, so that we see whether equities actually do want to really sell off into the cash open, or whether we're going to see some people starting to buy for the Fed pivot. So we're basically balancing, is this non-farm payroll enough to move the Fed away from the pivot, or is it okay to let it go? Can we let this data release go as a one-off seasonal? Remember the seasonal impact of December, guys, yeah? The seasonal impact of December can be quite high. Does everybody understand that? I'm not particularly surprised at this number. It's not something that catches anybody that understands the seasonal factors with employment trends. It's not something that you're going to look at and go, oh my God, how hot is that number? I don't think that's certainly not my initial take on this one. I don't think it's a surprise that we're getting a hot number for the, kind of the seasonal December, kind of prints by any means. So I don't think this is as hot as you might think it is. I just think we haven't actually factored in the seasonality of these types of positions. I might be wrong.